By the end of this section, you will understand what are Japanese candlesticks. You'll learn how to identify the various types of Japanese candlesticks. You'll learn how to trade Japanese candlesticks. You'll learn that Japanese candlesticks often indicate potential turning points in the market. Now here we have two Japanese candlesticks. We have a bullish candle and we have a bearish candle. So with Japanese candlesticks, we have what's called the closing price, we have the opening price, we have the low price, and we have the high price. So bull candles are candles that go up, okay? Bull candles. They have the opening price near the low. So they open down here and they close here. And sometimes they have a wick that goes up here. And the wick simply represents where the market was. So at one point in time, this candle, the body of this candle here, was actually up here, okay? So this is the high price of the candle. This is where the candle actually closed. So let's say this candle opened at 1 o'clock and closed here at 2 o'clock, okay? But during that 1 hour period, there was a time when this candle, the close of this candle was actually up here. Let's say maybe at 1:30 this candle was actually way up here, but let's say 10 minutes before 2 o'clock prices came back down and actually closed here. So this is the close, this is the open and this is the low for this bull candle. And the same goes for the bear candle. The only thing is that with the bear candle, it opens here and actually closes here. Bear candles go down. So this is a bull candle. This is a bear candle. Now here you can see examples of candles on charts. You can change the colors of the candles to whichever color you choose. Here our bear candles are black candles and our bull candles are white candles. So here we have a bear candle, open here, closes here. Here we have another bear candle, open here, closes here. Here we have a bull candle, open here, closes up here. Highs and lows. Now a high is a candlestick pattern in which there are two candles to the right and two candles to the left that are lower than the high of the center candle. Okay? And a low is a candlestick pattern in which there are two candles to the right and two candles to the left that are higher than the low of the center candle. Now here we have some examples of highs and low. Here we can see we have two candles to the left of this candle, 1, 2, and we have two candles to the right of this candle, 1, 2. So this is an high. Here also we can see we have two candles to the left, 1, 2, two candles to the right, more than two candles to the right. So this is an high again. Now here we have a low. We have 1, 2 candles to the left, 1, 2 candles to the right. So this is a low. Okay, so these are highs and low. Here we have another low. Here we have another high. Here we have another high. Here we have another low. And that is how we identify highs and lows. Candlestick patterns. Now, candlesticks with bodies longer than their wicks are called decision candles, while candles with longer wicks than body are called indecision candles. And here we have some examples. So here we have an decision candle. Here we have a decision candle. Here the body is longer than the wick, right? So this is a decision candle. Here we have an indecision candle. Here also we have an indecision candle. So these are some examples of decision and indecision candles. Here we have an evening star and here we have a morning star. An even star and morning stars patterns can consist of more than 3 candles. We can actually have a morning star pattern with 4 candles, 5 candles. The most important thing is the U-turn, is this turn here. the fact that we have this turn in price movement. Price is going down, stops and gives us this turn. This is what's most important. And this candlestick pattern is very powerful. Okay, evening star patterns and morning star patterns are extremely powerful, especially when you combine them with different techniques. Okay, so I have taken many trades using evening star and morning star patterns in the past. They're extremely powerful, especially when you combine them with stuff like trend lines, indicators, etc. Now, the third or last candle of the evening star must close beyond the 50% mark of the first candle. So here we have an evening star. The third candle, which is this candle, must close below 50% of this first candle here. That is necessary for this to be confirmed as an evening star pattern. Okay, the same goes for the morning star. The third candle must close above 50% of this first candle here. So this is an example of the evening star pattern and the morning star pattern, two very powerful candlestick patterns. And remember, the evening star can be more than 3 candles, and the morning star also can be more than 3 candles. These candlestick patterns can be composed of several candles. The most important thing is the U-turn, is this turn in price movement. So here we have some examples of evening stars and morning stars on charts. Here we can see a morning star pattern that is comprised of several candles. We have 1, 2, 3, 4, 5 candles in this morning star pattern. And as you can see, the result of this morning star pattern is higher prices. So these candlestick patterns can be extremely lucrative to trade. Okay, once you combine them with other techniques, these candlestick patterns can be extremely lucrative. Okay, now here we have an evening star pattern, a lovely evening star pattern. This is a textbook evening star pattern, and prices fell so many pips. This one is absolutely amazing. Now we have tweezer tops and tweezer bottoms. And tweezer tops and tweezer bottoms consist of 2 or more candles with wicks that are at least 60% of the length of the total candle. The bodies of the candles can be bullish or bearish. So here we have examples of tweezer bottoms, and here we have examples of tweezer tops. This is also another powerful candlestick pattern. When I first started trading, I loved trading the tweezer bottoms and tweezer top candlestick patterns. These are absolutely amazing, especially again when you combine them with other techniques. So the tweezer bottom here is a textbook tweezer bottom. We also have tweezer bottoms like these where they're separated. The first and last candles are separated by several candles. Okay, tweezer bottoms. Now with tweezer tops and tweezer bottoms, we want the wicks of the candles to be at least 60% of the total length of the candles. We want the wicks to be longer than the bodies of the candles. Okay, and if the wicks are relatively equal, relatively equal in length, that is also very good. The wicks can be of different length, but when they are relatively equal or close to each other in length, that is absolutely amazing. Okay, the ideal tweezer tops / tweezer bottoms have wicks that are similar in length. So here we have some examples of the tweezer top and the tweezer bottom candlestick pattern. Here we have a lovely example of a tweezer bottom here, and prices just rallied. Lovely example here. And here we have a lovely example of a tweezer top. This tweezer top here is absolutely amazing. Nice tweezer top, prices fell. So you can open a demo account and start trading these tweezer tops and tweezer bottom patterns. When I first started trading Forex, I loved trading the tweezer top and the tweezer bottom patterns. So you can start practicing with that and get used to identifying these patterns. Now here we have some examples of the bullish and the bearish engulfing pattern. Okay, this is an engulfing bearish candle, also called the engulfing bar. And here is a bullish engulfing candle, also called the bullish engulfing bar. Okay, now bullish engulfing candles engulf the previous bearish candles after a downswing price move, and the bearish engulfing candles engulf the previous bullish candles after a upswing price move. Here we have a downswing price move, price is going downwards, and then we have this bullish engulfing candle. See this bullish engulfing candle engulfed all these candles, so this is a nice bullish engulfing candle, and as a result prices rallied. Okay, here we also have a bullish engulfing candle engulfing this bear candle here, so this is also a nice bullish engulfing candle. We also have a bullish engulfing candle here. We also have a bullish engulfing candle here. So several bullish engulfing candles. Now here we have a bearish engulfing candle. So we had this upswing here, this upswing price move, and then we have this bearish engulfing candle. Here, another example of a bearish engulfing candle. And you can say how the market reacts to these candles. Bearish engulfing candle, market fell. Bearish engulfing candle, market fell. So candlestick patterns can be extremely lucrative to trade. Okay, now pause this video for a while and try to identify the candlestick patterns on this chart. Now, did you identify these patterns? Did you get this tweezer bottom here? Did you get this engulfing bullish candle here? So several candlestick patterns on this chart. Here we have a nice evening star. Here we have an evening star again, and look at this evening star, market fell, pulls back, evening star, market falls, engulfing bearish candle, market falls, market rallies, evening star. So you can see that these candlestick patterns are extremely powerful. Okay, extremely powerful, these candlestick patterns. Evening star here, the market fell. So several evening stars, several engulfing bearish candles. So these patterns are extremely important. Practice trading these patterns. Open a demo account and search for these patterns. Okay, it's very good to learn to identify these patterns on charts. Now pause the video again and try to identify as much candlestick patterns as possible. Now, did you get these patterns? Did you see this engulfing bullish candle here after this pullback? Engulfing bullish candle. Did you get this morning star here? Did you see this engulfing bullish candle here? We had an engulfing bullish candle here, but prices fell anyway. So nothing in Forex is 100%. The candlestick patterns won't work on every single occasion, which is why it's good to combine these candlestick patterns with other techniques. For example, we have a trend line here, and here we have a morning star pattern near the trend line, and look, prices rallied. So it's good to trade these candlestick patterns with other techniques such as trend lines, indicators, etc. Okay, it's good to combine your knowledge of these candlestick patterns with other methods of trading the Forex market. So lovely patterns here. We have nice bearish engulfing candle here, prices fell. Bullish engulfing candle, prices rallied, tweezer top, price pulled back. And yeah, we have a small bullish engulfing candle here, prices rallied. So absolutely amazing. The market will test a candlestick formation. For bullish candlestick patterns, the bears will test the lows for selling interest. If there's no selling interest, the pattern will hold and prices will rally. If it's a bearish candlestick pattern, the bulls will test the highs for buying interest. And if there's no buying interest, the pattern will hold and the prices will fall. So this is the reason stop loss orders have to be placed above highs and below the lows of candlestick patterns, okay? Because on most occasions, the market will test. The market will test to try to find buying interest. Remember, Forex trading is a game between the bulls and the bears. The bulls are looking for more buyers and the bears are looking for more sellers. So the market on most occasions will test. Let's look at some examples of this. So here we have a nice tweezer bottom, and then prices rallied, and then we started to get some tests. Prices tested this tweezer bottom on several occasions. So we have several tests. So if you took this tweezer bottom, if you entered the market here buying this tweezer bottom, your stops should be below the lows. Okay, your stop loss order should be below the lows. Give the market room to test, because on most occasions the market will test these candlestick patterns. For example, let's look at this evening star here. We had a nice evening star here, and before prices fell, we had a test of the evening star. See, we had a test. The bulls were looking for buying interest. They found no buying interest, and as a result, prices fell. So we have tweezer bottoms here. We get the buy. The bears were looking for more selling interest. They found no selling interest, and as a result, prices rallied. So on several occasions, we will get a test of the candlestick patterns. Here, we have an evening star. Prices fell. Then we have a test of this evening star. A nice test here. Prices came as far as halfway of this evening star pattern. So if you took this evening star pattern, if you sold this evening star pattern, your stop should be above the highs. So that gives the market room to test, and then it fell. So on most occasions, the market will test the candlestick patterns. Now, when trading candlestick patterns, do not trade candlestick patterns in consolidations. And what I mean by that is whenever the market is moving sideways, whenever the market is in a sideways pattern, going sideways in a sideways zone, we're not looking to trade candlestick patterns in a sideways market. If the market is just going sideways, we're not really looking to trade candlestick patterns in that sideways pattern. We will wait until prices start to trend. Prices start to trend up or trend down. We want to wait until prices start to trend before we look to trade candlestick patterns. Now, you must trade candlestick patterns in the direction of the trend. So we want to trade candlestick patterns in the direction of the trend. If we're in an uptrend, we're looking to trade candlestick patterns that signal that the market will rally. So we want to trade candlestick patterns along with the trend. Okay, so it's best to trade candlestick patterns in the direction of the trend. Now, trade candlestick formations at Fibonacci levels and at trend line bounces. Fibonacci levels is something that I cover in another one of my courses. In my comprehensive course, I actually cover how to trade using Fibonacci levels. So if you want to learn more about that, you can actually check out that course, or you can do your own research on how to trade candlestick patterns using Fibonacci. Okay, so we want to trade candlestick formations at Fibonacci levels and at trend line bounces. Those are two levels that we want to trade candlestick patterns. So whenever we're trading candlestick patterns, we get a higher probability trade if we combine the candlestick patterns with Fibonacci levels or trend line bounce, or you can also use indicator crossovers. But I prefer to trade with trend line bounce and Fibonacci levels. Okay, in this course, we actually cover how to trade candlestick patterns at trend line bounce. Okay, so you will learn more about trading candlestick patterns on trend line in this course. Now, when trading candlestick formations, ensure that stops are placed a couple pips above the formation when selling and a couple pips below the formation when buying. So if we're trading a morning star pattern, which is a bullish pattern, our stop should be below the low, okay? So if we're trading, let's say, a tweezer bottom formation, we want to place our stops a few pips below the lows of the tweezer bottom. If we're selling this evening star pattern here, we want to place our stops a few pips above the highs of the evening star pattern here. Now, one of the main rules to trading is if the risk of the trade is too much, do not take the trade. Remember, the key to trading Forex successfully is managing risk. Now, candlestick formations allow you to have very little risk on the trade, so you can keep your losses small and let your profits run. That's one of the benefits of trading candlestick patterns. They allow you to have small risk because you know if prices go below these tweezer bottoms, you're looking to exit the trade and you're looking for another trade, okay? So that's one of the most important benefits of trading candlestick patterns. They allow you to have low risk. Now, here is an example of a trade you could have taken using candlestick patterns. Here we have an engulfing bullish candle near a trend line and the market just rallied. And look at the risk, small risk in comparison to the potential reward. This is the beauty of trading candlestick patterns. So, did you learn what are Japanese candlesticks? Did you learn how to analyze trading charts through the use of Japanese candlesticks? Did you learn how to identify the various types of Japanese candlesticks? Did you learn how to trade Japanese candlesticks? And did you learn that Japanese candlesticks often indicate potential turning points in the market? Now, if you're not sure about any of these points, please watch over these videos. And remember, if you enjoy this course and if you think this course can add value to more students, please leave a review.